Hey everyone, Brian Pintar here. Anyways, the Fed talks next Wednesday, the 17th, or it's coming Wednesday, the 17th, and they're expected to do a 50 basis point rate cut. So, last time the Fed did a 50 basis point rate cut, we saw a pretty significant increase in mortgage rates, approximately three eighths to even a half in some areas. In the email or in the comment section below, you'll see the charts and the data on that. In fact, last year the Fed did a 50 basis point cut, a 25 basis point, and a 25 basis point cut, and mortgage rates went up every single time. So, why is that? It's because when you cut interest rates, you create instability. When you create instability, you increase volatility, which is measured by the VIX. And when you have higher volatility, mortgage lenders will then put more risk into the interest rates. So right now we haven't had a Fed rate cut, obviously, since the very end of 2024, but we're sitting at the lowest interest rates we've had in almost 2 years. The reason why is because the market's been very volatile, which means there's less risk, and less risk means the mortgage banks we can take a percentage of risk out of the interest rate, which then creates a lower interest rate. So what's going to happen this time is when the Fed lowers rates, just like last time, the mortgage rates are going to go up. The biggest problem this time is that we're cutting interest rates into rising inflation. And that's really bad. We rarely ever see interest rates being cut into rising inflation because it could lead to stagflation. We hear a lot about the job numbers and that they're going down and whatnot. The reality of though is unemployment stayed the same. It's at 4.3%, between 4.2 and 4.3, and that's considered full employment. The number one problem we have right now is there's just not enough jobs for people that want to work. And so, anyways, keep this in mind. Am I right 100% of the time? No, I'm not. But I can just go off of history. And again, in the comments section below, or if this is an email, you can read through it. This is what happens the majority of the time, especially in this specific situation, because we are cutting rates into inflation, that I would fully expect mortgage rates to rise. If you have any questions, call me anytime. Have a great weekend, and I'll talk to you soon.